Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, at the end of the weekend, a last minute deal to raise the US 31.4 trillion debt ceiling now turns the attention to this week's risk, which holds the key events towards US consumer confidence, Chicago PMI. Along with that, we do have the US ADP employment, along with that with the ISM manufacturing PMI and the key event being the US non-farm payrolls. Meanwhile, the US dollar index, which measures the greenback strength against a basket of six major currencies, continues to rise and refreshes its 2-month high around 104.32 after Friday's release of a hotter than expected personal consumption expenditure, which is the PCE, the preferred inflation gauge the Federal Reserve looks at. It rose by 0.4% on a monthly basis and up by 4.7% in the last 12 months. The inflation report, on a more broadly outlook, appears to have gotten stuck in a 4 to 5% range, which is likely to complicate the US Federal Reserve, as Friday's statistics could lead the US Central Bank to increase rates by a quarter point at its next meeting in June. While not so long ago, a pause was widely expected. Along with this, as I mentioned before, the debt ceiling, it would seem that the two sides have got together and finally come to an agreement. That is a tentative agreement. So therefore, let's see how the week unfolds. But with the economic data risk as well, could see a little bit more whipsaw price action, I would say. In terms of the Australian dollar, well, the downside call from 65.90 has reached its objective of 65 cents. This is only seen as a pause, not a technical level, because I feel there is further scope to the downside that could lead towards the region of 63 cents. With any advancement this week, may find resistance around 65.70 and minor at 65.35. When we look at the euro, well, the market crushed the level around 107, but managed to just about recapture the momentum. So not quite getting the close underneath that level. And therefore, could see another down challenge as the trend is still somewhat strong. And therefore could see a break beneath 107 figure 25 area and look down towards the area of 105 to 106 and reassess from there. The bull run for dollar yen has risen now 10 out of 12 days as the bears leave the scene as the bulls continue to pick off the resistance. A very strong trend, but we are overbought. Nevertheless, the market is not expected to pull back until we reach the target of 142, as I've been holding there for some time. Once we reach that area, we could see a bit of profit taking, so do keep in mind that as we gradually get closer to the objective, that you continue to raise your stop loss according to your risk management. The sterling was also weaker, but managed to recoup some of the losses, but still holding underneath the level around 123.80, which was a break level. In light of the pattern, there is still further evidence to the downside that leads to 122.70 and reassess from there. The gold outlook, the market crushed the level of 1,952 and now puts further risk to the downside, seen to an objective, which is somewhere around 1,928 to 33 and reassess. The bears are holding very well when it comes to a trend, and also there is a little bit of divergence here, but that could be crushed and negated more to the point and see the challenge to that bottom side. If we do see a break of 1,929, that would lead us down towards around 1,870 to 80. Wrapping up with oil, the market is still not backing away from that top side level of $74 a barrel. If we see a break there, that could give further move, that is, to the upside and see a rise to $76. With any pullback likely to be shallow, somewhere towards the region of 71.15 as a short-term base. Well, that's a wrap for the start of the week. Thank you very much for joining me. And as always, look out for the intraday report, and I hope you enjoy the great start to the day.